is. Oh, what the hell? Oh. Yeah. The Big G, the internet in Pakistan is fucking shit, man. So it's usual. Oh shit. Okay, so if you look at this, you remember this standard deviation we chose for this move, right? So the standard deviation, which you remember this standard deviation right at that point, and the red line. I was talking about this way, I even forgot when I was talking about this, when I drew this on the chart. Then we were taking this standard deviation. We used this standard deviation. Then we took this standard deviation, 100%, like 200% exact, not exact, but it's like 177 or 17806. And the next was around this point. So I am just watching price now. But I'm not allowed to do what? I'm not allowed to short it. Renkois Saldio mostly use ICT concepts. No, brother. It's like I have my own strategy, and most of the time I would see things overlapped onto each other. So what I'm streaming or I'm sharing with you is mostly ICT and putting it in a framework, like in a sense, if you have the right tools but you don't know how to use them, so they are not good for you. In a sense, it won't do any good for you. So it's like I'm just categorizing how to use, when to use ICT, when not to use ICT. I'm using ICT for your understanding, and I sometimes do use ICT. Like for example, if I'm using the NVOGs or the previous day close, it's derived from ICT, right? It's just a power of three is the ICT concept, but I have my own twist, not in a sense. Okay, I am melding it. I'm trying to understand it myself, but not in a rigid way. For example, if ICT said, okay, this, and that, that's for sure. No, I'm going to backtest that thing, and I'll exactly know, okay, what are its pros and what are the limitations of that thing. Every tool that I use has its own limitations, and I know what the limitations are. So that's how I'm able to navigate in this market correctly using discretion. Because I've done this a lot of times. So it's discretion and screen time, like it all comes together after a while. You just keep doing it. So anything else do you want to understand or ask about? You can go ahead and ask me. One minute. We'll go into some details. Okay. So this is the opening range gap we have today. We opened at this point, came to the 50% of this gap. The gaps are notified by this color. Then what we are going to do is whenever the gap is shows the standard deviation points again, and use this, work it out please. Sure, Big G. Big G is, it's not hard in a sense, it's not rigid in any sense. I'm just using once we the total of this range, just using this, just eyeball it, you'll realize okay, where I'm coming from. You'll have an intuitive feeling where I'm coming from. Just take a look at this point. Big G, I'm using this because as we broke out of this point, this was the whole range. We were stuck for a while, right? From this low, this started from this point to this high. Okay, so I'm using this as a total point, and if we clone this box and put it above it, it would be exactly at this where the price is right now. Okay, then I'm using this point and that point, so the both aligned at that point. So I was like, okay, we have a confluence. Why didn't I use this point and not that point? Yes, I could have. If I use this point now, if I use this point and not look at the 61.8, 150 or anything, just hundreds in the standard deviations of hundreds, 1, 2, 3, and 4. So that would be, if I just use this point, okay, you keep track of where the, see this, the third one. I'm going to change the color. Okay, using that, you see this, I'm going to change the color. So this becomes the first range, the second range, and the third range, right? So as I'm using the standard deviation models, obviously standard deviations tools, I'm using those tools with confluences with each other because the market moves. This is the base philosophy of this thing. Okay, the market moves in a the market keeps account of the risk to reward ratio, so it has to move in 1-to-1s, 1:1. Matlab, on the ideal standpoint, the market wants to give you 1-to-1 risk to reward ratio if you are good enough, not more than that. So it's his whole job. So it moves in measured moves relative to itself. So I'm using this whole block just as a confluence. As I'm using the standard deviation, I'm using these confluences with each other. You get it? Big G, did you get it or not? Yeah. So we were the minutes. You see this thing that I use, the opening range gap. It it's not perfect, but it has its own uses and its own limitations. For example, if whenever it doesn't works all the time, okay? So whenever if I'm using this standard deviation on the opening range gap, I mostly use it whenever there is a huge gap. So what I do, I would like clone it, put it above this point. That would give us the a general idea of the what can we expect. for the day. So this is the 2 standard deviation of the opening range gap. That would be temporary marked as yellow. So we are here now. Wait. On the 1 minute, the 1 minute, looking at. So this becomes, for now, at this right time and point, this is the assumed risk. This is the assumed risk to the low. This is the generally the assumed risk. For now, the price is at the extreme point. Even if I try to buy it, my stop would be around this point. So I'm looking, as we have reached the target, I'm not looking to do anything. If I were, I would be looking to buy it from this point. Not buy it, but this is the generally in the area of interest. Okay, guys, so do you have any questions, or should I leave then? Can go on. There was a guy in comments who was asking me a lot of questions. I don't know where he is now. Like the whole paragraphs. Okay. Two 38. What's your outlook for tomorrow, JS? As long as we are above this point, and it's the outlook is, I never make the outlook like I'm bullish or bearish. I'm just not looking to do a such thing. For example, if I have my certain criteria, if the price stays above this point, I'll definitely not be looking for shorts. So if it gives me that tomorrow, then I'll be looking to go short. So it's all about, okay, what's happening right now is really important, and I do not have a rigid idea of what's going to happen tomorrow. It can, for example, if we have reached the target, now I can expect some chop, or if it gives me something, I'll know at that time. It's most of the time it's real time data what I'm interpreting with a general narrative of higher time frame bias. If we this whole, okay, I can think that's about it. Uh, dollar. The dollar. Good wrestle, Kevin. Okay, Big G. Okay, so this is the point, right? This was the dollar DXY. I was looking at this chart and on the stream, I was told here I'm not looking for shorts on the DXY. So on that particular day, on Monday, at this point, see this point, it wasn't delivered to the downside. As I was talking on Monday, I was like, not today. I'm not talking about today. This is an unusual thing. So the whole market came back. I'm generally speaking interested in this point. We remove this background. We remove this whole area. The most important things are above this 50% of this box. So I'll be watching how the price reacts to this point, and this stream of this dollar, it's hasn't played out as I'm expecting yet, so it has potential, still has a lot of potential. Okay, that's about it.